Hello to everybody, our dear subscribers. FutureTrend channel is glad to welcome all of you. Today is 26th of July 2019. We are ready to present our daily view of how we trade major currencies in the world financial markets. So, you know that yesterday the European Central Bank finally took its decision. It left open, fully opened, let's say, the door for further monetary policy easing measures for September meeting. Also, they decided to postpone its interest rate cut. The market expected interest rate cut of 0.1 to 0.2%. Anyway, this time the European Central Bank decided to stay a little while undecisive. So, as a result, the euro finally moved to the upside as a result of yesterday's trading session. Probably not so strong as some of market participants expected in case of no cut or postponement of further monetary policy easing, but besides of that, taking into account that the European Central Bank overall still suggest that September will be quite more comfortable time of period to enter into new kind of easing measures and finally to cut interest rates. Also having the new economic projection numbers, so it's much more comfortable and suitable time to over-deliver, let's say so. As a result of yesterday's press conference, where once again the European Central Bank chief Mario Draghi spoken not so strong in the dovish side as some of market participants expected. As a result, you see that euro-dollar at the moment is trading above the lows printed during previous trading session around 111.02. We once again refresh the lows of this year, but we still not far from that level. Now we are trading just 40 pips from that lows. So once again, we are seeing the situation where the United States dollar is looking quite strong because of the series of stronger economic publications from the United States, and yesterday is not an exclude. You know, the durable goods orders came in much higher than the market expected, both the absolute numbers and the core one. So taking today economic calendar, important economic barometer of the United States economy, the so-called advanced gross domestic product number, should be published at 12:30 Greenwich time. It's really a very important economic barometer, probably the second one after the payrolls report on inflation numbers in the United States. But the market, taking into account once again that the market still interpreted the last series of stronger economic publications of the United States economy as an indication of smaller interest rate cut from the part of the United States Central Bank, that you know that this meeting should take part next week, in the middle of next week. So this reconsideration of interest rate cut from the United States Central Bank continues to drive the United States dollar higher at the moment. So in case of higher printing of today's United States advance gross domestic product data, you know, the market expected plus 1.8% on the quarter basis. Of course, comparing to the quarter one result, where the gross domestic product was at plus 3.1%. This number is not looking so strong, but anyway, taking into account that the last series of economic numbers were much better than expected, also the market suggests that probably today's gross domestic product data could come in above higher than expected. For example, above the so-called forecasted numbers by the Fed. You know that the Fed prognoses this number around 1.8, 1.9% as a balanced one, so-called equilibrium numbers that should suit the United States Central Bank. And should suit the United States Central Bank's policy. In case of worse numbers, for example, if they came in below expected, below 1.8%, of course the United States dollar could come under the selling pressure, and vice versa. In case of better printing, for example, above 2%, of course the United States dollar should continue to trade higher. So it's nothing to say much more about this situation. So as regarding the technical picture, friends, let's see the situation first of all with the euro dollar. The big mover of yesterday's market. You know that the high was printed around 111.90. This level should present a first kind of resistance barrier, with 111 kind of stronger barriers to the downside. So in case of breaking below 111, of course the euro should continue to trade lower during the course of next trading week. In case of closing, especially in case of closing below this technical barrier. At the same time, if we break above 112, it will be a bullish signal for the euro currency. But of course, a lot will depend on today's United States advanced gross domestic product data. As regarding dollar yen, the same applies here. In case of breaking above 109, the first reliable resistance barrier, the dollar yen could accelerate its advance higher, and vice versa, because we should understand that overall the dollar yen still in the bearish type of channel. First of all, we are trading below both of moving averages, 100 and 201, as well as you could see, we're still trading below longer term downtrend line, located today around 111.85. Also, there are some other resistances, for example, in the form of a psychologically important barrier 110. We continue to suggest that the dollar yen is a game for these pair is to sell on any upticks, continue to retest at the so-called long uptrend line in the pair that was drawn from the lows printed in the far 2016 till now, so-called 2016-2019 uptrend line that's located today around 106. As regarding sterling, this morning continued to look not so good, not so buoyant, and that's because Boris Johnson is a new prime minister, and you know how aggressive he is regarding the hard Brexit and no Brexit, and that means that the chances for no Brexit and hard Brexit at the deadline of October 31st is looking especially high. Anyway, we should understand from the point of view of a long-term picture, the fundamentals should continue to support the cable. But of course, the first reaction, of course, should be for the cable to dive. Today we continue to suggest that probably in case of worse printing of today's United States gross domestic product numbers, the cable could receive some boost to the upside, and that's why we continue to buy. We continue to suggest that we could add to our existing long at 125.10. We are ready to buy at 124.10 with a stop below the lows of this year printed around 123.80. As regarding dollar Swiss, here the same. First of all, we should understand that we break above the downtrend of this year, immediate kind of downtrend line, but at the same time, more important support resistance should lie around the parity level, a so-called psychological barrier. So we suggest to sell the dollar Swiss franc on a possible retest of this level, with a stop above the highs printed on in June this year. The highs was printed around 10014. At the moment, that's all, our dear subscribers. For those of you who are looking for trade opportunities in the euro crosses, here it's our portfolio, where we still have a short position in the euro sterling, and we entered a short position in the euro Swiss. But we should understand that not everything is so simple now with the euro Swiss. Because in case of breaking above 1050 and closing on the weekly basis above, overall speaking above 110, it should suggest that probably we touched an interim lows just below 110 in the euro Swiss, and that means that probably in the days to come, the euro Swiss has a potential to recover even to its current downtrend line allocated at 112.30, with fast reliable resistance around 111.72 at the highs of July this year. As regarding euro sterling, we already told a few pips we missed to close our position. As you know, we put a stop, take profit with our euro sterling position at 88.80, but the low was printed yesterday around 88.91. So here overall the situation is still bullish longer term, but anyway we still hold our short position in the euro sterling, but move a stop loss to the entry level. And finally, a few words about the Russian ruble. Today, the Central Bank of Russia made a decision. Our principal idea that the Central Bank of Russia will deliver a quarter-point interest rate cut during today's meeting, but will leave the door open for further interest rate, for further easing. And that means that probably till the end of the year, in case of more or less stable situation with the sanctions against the United States and with the economy in Russia, probably we could see another 2 interest rate cuts in Russia. So that will bring the overall interest rate, official interest rate in Russia, below 7%. That means that probably Russian ruble has some room to depreciate over the course of this year. And that means that, for example, in case of euro ruble, probably yesterday's dip to below a psychological important barrier of 70 should be witnessed as an interim low also here, like in the euro Swiss, for example, or in the euro yen, where we also suggest that 120 should remain an important an important support at the moment. So against this support you can buy the euro yen, and as you could see from our report that we are ready to buy the pair at 120.80. We suggest that this type of currency pair has room to appreciate and even to retest its current downtrend line allocated at 123.60. As regarding commodity block of currencies, here we were stopping profit from our kiwi position, but entered a small long in the Australia dollar, and still keep our short trade recommendation in the dollar Canada, but with very tight stop loss. And as regarding exotic currencies, here we don't have any kind of positions. Interesting situation here in the pair of dollar Turkish lira, but probably it's enough for today. We wish you a pleasant closing, profitable closing of this week. Take care and bye bye to all of you. See you next week.